It was in the green, then red, then in the green, and then red. So now it's like people don't know how to take this data. Well, I'll tell you how to take the data. It's good data, right? But I think people are trying to overthink this. So what actually came out this morning? CPI report finally came out, and it shows that headline inflation went down to 6.5% from 7.1%. That's over a half percentage point drop month to month from November to December. This is measuring inflation in December. And core inflation went down to 5.7%. So both of these numbers are in line with expectations. It didn't go above expectations or below expectations, right at expectations. But overall, inflation is coming down. It's coming down. So take a look at this. All right, so let me remove my, where's my camera? All right, here we go. All right, so this is month to month inflation data going all the way to 2012, right? So before 2021, we were always consistently around 1 to 2%, maybe a little bit higher than 2, right? But you could see since 2021, we went up from 1.4 at the beginning of the year all the way to 7, and then we went in 2022 7.5 all the way up. We peaked around 9.1, but now we had six consecutive months of declining inflation. So 9.1, 8.5, 8.3, 8.2, 7.7, 7.1, now 6.5, right? So that's the lowest inflation since November of 2021 or October 2021. So we're definitely going in the right direction. This is good. This is good news, right? So I'm not quite sure why Wall Street is still taking this as bad, because Powell is smiling right now, right? He has to be, because he's been taking so much heat about what he's been doing with the aggressive rate hikes, been questioned by millions and millions of people worldwide, or you could say billions, because it affects not only the U.S. economy, but everywhere else, right? But it's clearly working. It's clearly working. We are seeing inflation go down. Now, we're not back to 2%, which is what he wants eventually, 2 to 3%. But that might never happen again because of all the printing that happened in 2020, 2021, and some in 2022, right? When you print 40% more dollars and put into circulation, well, you can't claw that back, right? So our inflation may never go back down to 2%. It could be at 3 or 4%, right? There's still more work to be done, but that Powell, he must be smiling. And during the next FOMC meeting, right, it's going to put a lot of pressure on him to continue to be hawkish, because he has said time and time and time again that, we got to be cautious, right? We want to make sure that inflation is actually going down, right? We don't want to stop too quickly. We don't want to pivot too quickly. But then again, we don't want to overreach. But with 6 consecutive down months, you can't say it's a coincidence anymore. You can't say it's just due to, energy price getting better or supply chain getting better, although both of those things do help. But overall, we are seeing numbers get worse, right? Consumer confidence getting a little bit worse. Housing getting a little bit worse. Retail getting a little bit worse. We're seeing a lot more layoffs, unfortunately, but these are things that are showing what he's doing is, he's doing is working, and what he's doing, has a plan, I guess, right? I think a lot of people thought that he didn't know what the hell he was doing, but we'll see. We'll see. The next FOMC meeting comes out in a couple weeks, the 1st and 2nd of February. So with this next FOMC meeting, I'm expecting him to be more dovish. He was pretty dovish last one already. I think he's going to be more dovish. Now, he did say he wanted to target 5%, right, in terms of the Fed fund rate. And we're about 4.25%, which means there's 0.75% left. So eventually, He's going to have to go down to 0.24. So probably the next two. It was originally anticipated 50 basis points for February, and then the one in, I think, March will be 25 basis points. But who knows? Maybe he changes that. Maybe he just go do a 25 basis point in February and say that may be enough. We don't need another one, right? Who knows what he's going to do or say, or what the other board of governors are going to say. It'll be interesting. But I do think this is definitely showing we are going in the right direction. I did notice that DXY also went down. We're down to 102. Which is fantastic. You know, we were hovering at 103, 104. Now we're down to 102. So the further that DXY goes down, the better it is for everything else like crypto and equities and everything else. There you go. All right. What else is going on today? Well, Peter Schiff still tweeting about Bitcoin. Bitcoin's trading above 18K. Its highest level in 3 weeks. Excellent opportunity for holders to sell ahead of the December CPI. Gold is only up $10, trading at 8-month high, while Bitcoin has already broken down. Gold has broken out. Time to drop Bitcoin. See, clearly nitpicking small pieces of data. Peter is better than this, but of course, he has to play this role of being a Bitcoin hater. Okay. Gold is up 8-month high, but down over the last 12 years. Okay. Down the last 10 years. Down, I don't know, in any significant time frame, gold is down except the last 8 months, while Bitcoin is up millions of percent over 12 years, right? So, I mean, Peter's going to do what he's going to do and continue to be bearish on Bitcoin because that's just his stick now, right? But you guys know. You guys know better. You guys know basically inverse Peter Schiff, inverse Jim Cramer, inverse Jamie Dimon, inverse whoever else there is that's a naysayer, right? It's not going to work. Bitcoin holders not going anywhere, no matter what anyone says, right? And lastly, as for Bitcoin, okay, you can't deny what's coming. You look at this, someone broke it down, right? I know the screen on the right is cut off a little bit, but it shows 2015 to 2017, bull market lasted 1,064 days. Then the bear market from 2017 to 2018 lasted about 364 days, okay? And then you look at 2018 to 2021, bull market lasted exactly 1,064 days. And 2021, from November 2021 to current now, to market low, 364 days. So identical. And if we continue to follow that pattern, that means we're on our way up and we have over 1,000 days left of ups. Looking forward to that. And we got a little taste. Yesterday. We saw the entire market go up. Shorters getting wrecked, right? So that's a little taste of what's to come. A little taste of winning and rubbing it in the bear's eyes, right? And we'll see more of that as we trend higher. But shorters got liquidated by over 200 million yesterday. I covered that last night. There's a lot of shorters that are still in disbelief, right? Still trying to short the market, and it's not going to end well for them. They had their run. They definitely had their run in 2022. Got to give them that. But Bitcoin's not going to stay down and out forever. It's itching to climb back up, and I think we already started. You have Nexo, another lending company, being raided by the police because the authorities think that they're involved with money laundering and violating global financial sanctions against Russia. Hopefully, neither one of those things are true. They are the only lending company basically left. Okay, and I did say, I'm not quite sure if they're going to survive or not. They seemed like they were doing okay. They had a couple of close calls. They had like over 100 million on FTX that they withdrew just like a day before they closed doors down. But people are noticing they are moving, money from other exchanges. For example, 4.4 million from Kraken. So I don't know what that's about, if there's a lot of people withdrawing right now or they're trying to safeguard themselves. Who knows? So be careful in Nexo at this point.